Hello traders, this is Senior Account Manager Adam House hosting the webinar on Daily European Open for this Monday the 11th of the 9th. Welcome to you all, hope you had a good weekend. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so coming up to the market week, there was a lot that happened last week. We had a couple of really volatile days, particularly on the US dollar last week, heading towards the end of the week on a lot of geopolitical risk around North Korea still, fresh in many traders' minds. So the market was very much aware of that scenario. Coming up to the Monday, September 11, and this commemorates the 16th anniversary of the September 11 attacks. So whilst it's important to pay homage to that, we also recognise the fact that traditionally on this day, the market is a little bit quieter. No one can really put their finger on that, but historically that's been shown to be the case. So especially that it occurs on a Monday, probably being the quietest day of the week. You know, we haven't seen much volatility on the market as we would otherwise see on a Monday. But taking that into account, you know, usually you'd see sort of a bit of a lackluster start to the market. But you know, important to commemorate such an occasion anyway. Representing 16 years rather, since the September 11 attacks. Coming up to the rest of the week, we have tomorrow the GBP, the Pound Consumer Price Index, and the Core Consumer Price Index at 6:30. This is all Australian Eastern Standard Time tomorrow night. Wednesday, we've got a quiet day, but coming up Thursday, we've got a whole host of data coming out for the AUD employment change and unemployment rate. We have the Swiss bank deposit interest rate, as well as the GBP Bank of England rate decision at 2100. Going forward, we have at 22:30 on Thursday, the USD Consumer Price Index, advanced retail sales for the US again on Friday, and the USD Michigan confidence or business confidence at midnight on Saturday. So the US dollar generally had a bit of a lackluster result last week. Had a bad week, losing ground across the board with no exception. US inflation and consumer figures stand out in the week before the all-important Fed meeting. The euro also was not convinced by Draghi's concern about the exchange rate and advanced. The pound got a boost from hopes for a soft Brexit. We saw the Canadian dollar as well, which was thrust forward with a rate hike from the BOC. And the yen advanced on safe haven flows stemming from heightened tensions between North Korea. And the hurricanes in the US, obviously, you know, the Fed, you've got the hurricane, Hurricane Harvey and Irma making buying dollars less inspiring. The Fed seems hawkish with Dudley's caution about the economy and Fisher's resignation as well. These are two key figures in the Fed. So we yet again ended off the day on ending off on a very lackluster result for the US in general. Coming up this week, the economic announcements, really important to pay attention to a number of key data that is coming out. We have the UK inflation report, which is going to be very keenly watched as a future guide of monetary policy. Let's just have a quick look at this here. Okay, so we have the UK inflation report Tuesday at 6:30. While the UK economy has slowed down in a late reaction to Brexit, price rises still remain elevated as a result of the weaker pound. Higher inflation led to musings about a rate hike, which in turn have later diminished with lower inflation. Headline CPI is now expected to rise from 2.6% to 2.8%. We've got the job openings on Tuesday. Number of jobs or open jobs is another measure of the job market. While the figure is somewhat late, the Fed gives the report its importance. In June, the figure leaped to 6.16 million annualized openings, sending the dollar higher. A drop to 5.96 million is expected. We've got the US PPI coming up as well, and that's providing further insight on future consumer price and also serves as a warm-up to the CPI report. After both headline PPI and core PPI dropped by 0.1% in July, rises are now on the cards. PPI is projected to rise by 0.3% and core PPI by 0.2%. Aussie jobs report at 11:30 on Thursday rather. Australia's enjoyed a healthy jobs market so far in 2017. The gain of 27.9k jobs in July is forecast to be followed by a gain of 19.2 in August. The unemployment rate is expected to remain unchanged at 5.6%. The Australian economy's situation also provides some insight into the Chinese one as well. Moving forward to the Swiss rate decision on Thursday. The Swiss National Party convenes for only once a quarter to make its LIBOR rate decision. The Swiss National Bank left its rates at negative 0.75% since removing the peg to the euro in a shock move in January 2015. No changes on the cards now. While the 1.2 floor under Euro CHF has been removed, the Swiss National Bank occasionally intervenes to weaken the franc, and they are likely to stick to their pledge now. Moving forward to the interest rate decision for the Bank of England. The post-Brexit interest rate of 0.25% is highly likely to remain unchanged. However, it will be interesting to see if there are any shifts in the voting patterns. 2 out of 8 members voted for a rate hike in August. That did not convince the pound at the time. Has anyone changed their minds? Maybe, if we see a bit of majority sort of voting as a yes. The fresh strengthening of the sterling will likely alleviate pressure to hike rates. Got US CPI coming up on the Thursday at 22:30. Jobs have been doing pretty well, but inflationary pressures are nowhere to be seen at the moment, and that's left the Fed with a bit of a dovish comments. In terms of raising rates, there's no urgency or increased urgency to be able to do that at the moment. It has left the Fed quite puzzled and markets to lower expectations. CPI is expected to rise by 0.3% and core CPI by 0.2%. Both advanced by 0.1% in July. Where will it move now? Well, we'll be watching the market very closely for that to happen. Following closely, we've got the US retail sales at 22:30 on Friday. Key consumption measure. Obviously, it's key to the US economy to be able to look at what sort of consumption is happening in the broader economy. After a few mediocre months, the report for July included healthy increases in spending as well as upward revisions. Headline retail sales are predicted to rise by a modest 0.1% after 0.6% beforehand. Core retail sales carry expectation for 0.5%, a repeat of the numbers seen in previous months. And then we go forward to the Saturday announcement on the USD Michigan confidence. Held once a month, doesn't really move the market that much, but we're expecting a modest decrease to 95.6 from 96.8 previous as well. So for today, we'll just go through some quick targets for the daily technicals today. We've got further bearish pressure preferred on the Aussie US dollar, with short positions preferred with targets of 80, 25 and 80 cents in extension. SPI ASX 200, we have long positions preferred to targets of 5730 and 5745 in extension. Euro USD, we have short positions preferred with targets of 1.1985 and 1.1950 in extension. Great British Pound against the US dollar, we have long positions preferred to levels of 1.3225 and 1.3280 in extension. USD JPY has a bit of a retracement occurring at the moment from that downtrend that we've seen, and has further long positions preferred with targets of 108.7 and 109 in extension. The pound has bullish preference against the Japanese yen with targets of 143.3 and 143.7 in extension. Gold has an under pressure preference with short positions preferred to levels of 1331 and 1325.5 in extension. And we have under pressure preferred short positions to 47.20 and 46.90 for oil as well. So hopefully that's given you just a little bit of background information in terms of what's coming up this week. Just remember to try and be on the front foot when it comes to finding out about economic announcements. Obviously, you don't want to be doing this sort of the middle of the week when we're in the thick of it and the volatility picks up. If you have any questions about that or any questions about the market in general or trading setups, then please don't hesitate to get in contact with your account manager at ForexCT, and they'll be more than happy to assist you. For the time being, thank you very much for your attendance at this webinar, and we look forward to seeing you tomorrow promptly at 4 o'clock. Thank you very much. Cheers.